NVIDIA reports earnings after today's close, the single biggest catalyst on the AI tape this week, plus 4 more stories moving the trade. Let's get into it. NVIDIA reports fiscal first quarter results after the bell today, the single most important catalyst on the AI tape this week. The street is locked on 3 things: Blackwell shipment volumes, the Vera Rubin ramp, and fiscal 2027 guidance. Vera Rubin, 7 new chips spanning CPU, GPU, NVLink 6, and now an integrated Grok 3 LPU, just entered full production for agentic AI factories. This print moves the entire complex because every hyperscaler CapEx thesis ultimately validates or breaks right here. The bear case is China. Washington cleared the H200 for roughly 10 Chinese firms, but not a single chip has shipped, leaving that revenue overhang completely unresolved. Watch the data center guide. Come in above roughly $70 billion for the quarter and expect the AI trade to rip higher. Guide light, and every CapEx inflection story you're about to hear gets repriced overnight. At Google I/O on May 19th, Alphabet fired its hardest shot yet, launching Gemini 3.5, a proactive agent called Gemini Spark, a cinematic video model named Omni, and then undercutting everyone on price. Gemini 3.5 Flash lands at roughly half to 1/3 the cost of comparable frontier models, and top-tier AI Ultra dropped 20%, from $250 to $200 a month, with a new $100 entry tier. This is a direct counterpunch at OpenAI and Anthropic, and it sharpens the bull case on Alphabet's vertical integration, TPUs, data, and distribution under one roof. The bear case, price aggression. This steep compresses AI monetization economics for the whole sector, Google included. The forward signal is adoption. If AI mode in Search and Gemini app engagement climb through summer, Alphabet defends its moat. If not, this becomes a margin-destroying race to the bottom. Anthropic's mega round is nearly done, at least $30 billion at a valuation north of $900 billion, expected to close as early as the end of this month. And the numbers behind it are staggering. First quarter revenue grew 80 times year over year, pushing annual recurring revenue above $44 billion. That trajectory reframes Anthropic as a genuine co-leader to OpenAI, not a challenger. There's a direct line from this raise to tonight's NVIDIA print. Capital this size becomes compute orders, and that's exactly the demand Jensen Huang has to deliver against. The bear case, a $900 billion valuation price is in flawless execution, and skeptics note how much frontier lab funding loops straight back into GPU spend. Circular financing dressed up as growth. The signal to watch is the close itself. If it lands by month-end at terms, the private AI valuation complex just got a brand new floor. Andrej Karpathy, an OpenAI founding member and the former head of Tesla's Autopilot AI, started this week at Anthropic. He reports to pre-training lead Nick Joseph, with a mandate to build a team that uses Claude itself to accelerate large-scale training runs. Coming right as Anthropic closes that $30 billion raise, it's a marquee talent win in an escalating war for AI researchers, and a symbolic blow to OpenAI just as competitive momentum visibly shifts. The bear case, one higher, however high profile, doesn't move ARR or ship a model next quarter, and the bidding war for talent is inflating compensation costs across every lab. But talent flow is a leading indicator. The signal to watch is whether more senior OpenAI departures follow Karpathy's path. If the dam breaks, it tells you where the smartest people think the frontier is actually heading. A May 18th sell-side note upgraded both Microsoft and Meta, arguing their AI spending is finally reaching the point where revenue growth outpaces the cost of building the infrastructure. Microsoft has poured over $80 billion into Azure and embedded generative AI across its stack. Meta has spent more than $70 billion on custom silicon, data centers, and Llama, plus a reported $20 billion Oracle deal. Here's the connection that matters tonight. That combined spend is, most dollar for dollar, NVIDIA's revenue. So this evening's earnings either validates the CapEx thesis or torpedoes it. The bear case is blunt. The spending to returns inflection is still a forecast, not a fact. And if monetization lags, $150 billion in combined annual CapEx starts crushing free cash flow. The signal: watch how Microsoft frames next year CapEx. Flat guidance is the all clear. Another step up means the bill keeps growing. The through line today is simple. Every story: Google's price war, Anthropic's mega raise, the talent grab, the CapEx bets, funnels through one number, and that number prints after the close tonight in NVIDIA's earnings. We'll break it down tomorrow. Subscribe to the Daily Alpha and never miss the signal.